Good evening, everyone. This is Henry Gambell with SimplerOptions.com, and in tonight's free video I wanted to look at some ideas with you in Best Buy. So Best Buy is set to report earnings before the market opens on Thursday, and as you consider the types of various trades that you can place on this, these are a few of the things that I like to consider. Now, with today of course being Monday, obviously, and then tomorrow will be Tuesday morning, you are getting a little close to the day of the earnings report to want to try and do anything that is long volatility. However, you can come back and reference this, and you can look at it two ways. One way of looking at it is by going into Thinkorswim and referencing the current IV percentile, which will show you where the implied volatility is for Best Buy in relationship to where it has been previously. So at the 74% level, you know that it does have a little bit more, that it could potentially move higher into Thursday's report. So if you were thinking about the idea of coming in and trying to buy it on Tuesday morning and have the opportunity to sell it with higher implied volatility on Wednesday afternoon, you can come back and reference your previous earnings dates. So you can see how, and it's not perfect mind you, but you can see the concept of just before earnings, that's where your implied volatility is going to be the highest. We come back and look at this previous spike, you see almost exactly the same level, and then you see the third report that I would reference here, which wasn't quite as exciting. This is why I'm pointing out the idea that into Thursday, volatility could sit here and trade sideways, or it could come up to where it was previously, just kind of depending on how the market prices that in. Now, that's how I'm looking at it in relationship to the implied volatility. Then you can also look at it for direction, because this is a very nice bullish chart, and even when the market saw the sell-off that it did on Wednesday of last week, all this was doing was pulling you back down in there to the 21 EMA, and I think Best Buy still has potential to move higher. So if you want to look at buying those, I think you could probably make 60 or 70 cents on the at-the-money options heading into Tuesday. Of course, if that ends up being a smaller value, you can manage prior to that. And then one other trade that might be interesting for you once we actually get into the report, so we've kind of shared an idea of how to play it over the course of the next 2 days. We can also look at playing it around the report. And the extensions don't land you quite there perfectly, but more what I thought was so interesting here is you have a $5 expected move. Let's just say you're trading 51 for the sake of round numbers. At the end of the conversation, and depending on what this is trading for on Wednesday afternoon, I think looking to this 55 butterfly, buying the 52, and then buying the 58 on the opposing end will be a good way to play it. Of course, I'll update that as we get closer into the report, but as of now, that's how I'm looking at it into the report, at the report, and a couple different ways to play it around that. So, I hope you found that helpful. One thing I wanted to make you aware of is the webinar that John and David are going to be doing this Wednesday, May 31st at 7 p.m. Central Time. So these are two of my favorite mentors. Obviously, I have learned a wealth of information from these guys, and these are some of my favorite indicators that they use as well, with the voodoo lines, the ready, aim, fire, and then they will also be discussing David's Dyna range indicator. So it's just the topic of setting up trades that have a certain level of confluence among them that tend to generate bigger signals, and I think that it's something that you'll find helpful. So there again, that's going to be Wednesday, May 31st at 7 p.m. Central Time, and I hope to see you there.